everybody? It's Omar. It is October 19th, 8:28 p.m. and I wanted to make a quick video talking about my two plays for today. I work, so I don't have the luxury of trading all day. I can only make trades when I have time, and a lot of times I can't even stay in a trade because I want to be in a trade. I got things to do, so I get out. Sometimes I get out early. So I've been on this dip buying spree lately, where I just basically buy dips. I think dip buying in this market's great. Even in a bear market, dip buying is not the worst thing in the world, because remember, dip buying, once a stock finds a support level, shorts are gonna cover and you can buy into those spikes. And basically what I like to do is I have this so let me just to show you guys real quick, and I want to make this video, I want to keep it under 10 minutes. For those that don't know, I have a Twitter. You can follow me, watchotrade, but I also have a YouTube channel, and in my YouTube channel I go over, oh man, I've been having some real internet issues. I don't know what's going on. Let's go to YouTube and let's just go to my page, watchotrade. Please subscribe, like, share. And I have all these videos, and one of the things on my playlist, I have a video where where I call it momentum trading fundamentals, but in there I do have a video where it says creating custom scanners and indicators using thinkorswim. Those are these right here. All right, so one of the things that I suggest that you guys can do is when the market, well, for one, you build your watch list, and you should be picking stocks that have a lot of volume, especially low floaters, because at some point they're gonna pull back, and they're gonna, shorts are gonna, they're gonna short it, but that's great for you, because when they cover, you get these nice spikes. So I made two trades, and one of the things that what I wanted to talk about is I have this scanner called 2-candle dip buy. Basically, what the parameters of the scanner is, I wanted to show me, and let me just pull it up here and watch the video. The video will show you how to make it, but so these are the parameters of the scan, and I just wanted to show me the price direction of the close has decreased over the last 2 consecutive bars. What that means is that when the market opens, all those stocks that are going red within the first 2-minute candles are gonna pop up on that scanner. And then what you want to do is you want to find the ones that have volume, so that you can watch it tank, because at some point all of these people that are selling and short sellers that are driving the stock down are gonna cover, and it's gonna drive the price of the stock up. So FCX was one of the stocks that I traded today. It wasn't on my watch list, but it actually popped up on my scanner, and I was able to watch it, and I caught it somewhere down here in the 1448 range, and I saw that it popped up, and then I saw it tanking. And what you want to do is you want to look at the big chart. Now let's do this. Let me pull up the big chart, and I am going to, oops, sorry about this, guys. Clear. Let me show you. So this is the 5-day. It should be a 5-day 1 minute. This doesn't. Let's do this. Let's go to time frame setup, and let's do the time frame. Yeah, 5-day 1 minute. Okay, this is 5-day 1 minute. So when we look at this stock, what you want to do is look at a clear support level. So over the last 5 days, this was the low. At this point, this was support, and when the market opened, this thing broke below it and it tanked. Now, what you want to do is you're looking for a clear bottom. So what I did was, when I saw it kind of pop and tank, I saw this candle go down right here, and I put a little, a line here, trend line, so that I can see. And then what I saw it was pop up and come back down. But what I saw it do was form a higher low. So this is what you got to think. Shorters are in here. Even shorters may even been from here, from post market. They're saying, oh shit, it's not going down anymore. It's holding this. Let me cover. And that's what causes the artificial spike. And you can see that it went from 1447 to 1467, okay, in a matter of 5 minutes. I got in here, I was in at 1447, just, and my risking was what, 2 cents. So you see, my risk is minimal, you know. I was risking, and this does have a lot of volume, all right. Doesn't see, but these candles have 50,000 shares, 30,000 shares, you know, 80,000 shares in each minute. So, you know, so what I did was I just held through and waited for the reversal, and you know, if it broke below, then I stop out. But if it popped up and I saw it get up all the way high to a high here of 1456, I saw it come back down, then it had this little pop, it came back down. I actually held through this because I felt like I felt like there was a chance that it was going to continue to go higher, and it did. And you know, it broke above, came back down again, and then you know, I held through this. And the reason why I held, because look, higher low, higher high, and then that's why I stood in and I didn't sell my shares, because I saw it forming higher lows. So you see, this is first support, second support, third support, fourth support. You see how it's forming higher lows? That is telling you that the momentum is shifting and the more volume coming in. So let me zoom in more. So when I saw that, you know, I just stood in and rolled this up, and I actually sold. I think once it broke 46 right into this pullback, I had to go and I sold. I think I sold. I thought I think I put in another group, I sold at 1455, but I actually sold at 1460. I think it was like 64 that I got out. So I got it like right in here, because I couldn't hold on to it no more. But it only got a few more cents up before it washed. So that was a great play, and I went in 2,000 shares. You know, so you know, that was a very, very, very good trade. You know, I made like, I don't know, like $300, almost $400 on that trade. And then the second trade that I took was on RGSE. So as soon as the market opened, come on, I'm sorry guys, I'm just, my computer's been really giving me problems lately. This is very slow. Hold on. All right, here we go. So I saw that this was moving pre-market, and I put it on my watch list. And as soon as the market opened, I saw this. This is called a panic. This is a pattern that was straight from my pamphlet that I sent to everybody that asked for it. This is one of those patterns that I talk about. When a stock tanks like this, you're gonna get a bounce. Always, 100%. The key is finding the bottom. What did I say in my previous dip buy video? It's the same pattern, right? You get the pull down. It's gonna find support at someone. You just watch it as it goes down. You just gotta be patient, all right? And you just see more selling. So you know, you're watching. So you see that it finds a bottom, and now you get that first little bounce, right? Right? So, you know, some people could have bought here, but you want to see is that confirmation. So look how it drops down, but it never gets back to that 233 level. All right. Now, right in here is where I bought. When I saw that it was tapping this, the second candle where I saw it tap this and then break below it, that's when I bought in. I went in 3,000 shares, and, you know, I just rolled this up, and it got as high as 257. It came back down. This thing kept going up. I actually sold. I got executed here at 235, and I sold my shares at 256. You know, so, you know, I made like 22 cents, but on 3,000 shares, which is great. So I made like a little over 600 bucks. So it was great. Simple play, you know. And, you know, look what happened. It pulls back. It forms a higher low. So that is more confidence that, you know, that it's going to have another spike. But, you know, you got to be careful, because you never know. And, you know, at some point this thing is going to collapse. And it got as high as 270. And then, you know, and then the big panic came. But remember, when you get a wash like this, all right, and you see how these little pops are happening, what's happening is these are short sellers covering some of their position. So right in here, see 151,000 shares, 183,000 shares. Right here, these are short sellers shorting the stock. And what's happening is, as these pops happen, they're covering some of their shares, because they're taking big size, like 20,000, 50,000, 80,000 shares. And then, but what you're waiting for is the big drop, so that you can get the wash. And look, you got the second one here. Look, and each resistance line becomes support now. And look at this. You got another bounce here from 241 to 249. Then you got another bounce here. Look, these are all bounce, because these are all these resistance lines become support on the way down. and then look what happens. It finally finds its way all the way down to 224, right? So this is what you gotta do. You gotta be patient. So you say, okay, here's the low, here's the gap up, it's bouncing, it's gapping up, but look, boom, the double bottom. That is the confirmation that you get in, because now you're saying, okay, it's showing that this is a true support level. And look, that's when short sellers saw what was happening, and look what happened. The stock gaps up all the way to 243, kind of pulls down, but it forms a higher low, and then you get the next little leg up. So you could have got here in the 220s, and I probably would have got out here in the 240s. I'm trying to take my profit, or at least took half off and left half on, or something like that, because you don't know if this is gonna continue to tank. But it got up to like 248, and then it tanks. So that's what I wanted to talk about, guys. So again, look for those stocks that are panicking at the open, so you can buy dips. It's low float runners that are that have a lot of volume, so that you can short. Like, I don't know, I haven't been in my watch list. Wow, look at this. QURA will definitely be on my watch list tomorrow. Let me see if I can find another stock before I end this. I want to find the opposite. Prawn. Look, all right, here goes Prawn. This is a stock that I traded before. This shit moves crazy. This will be on my watch list tomorrow. Look for this tomorrow. And it's a low floater. That's what you want. You want stocks like these because you can buy dips. They're very volatile. So look, this is a stock, and this is straight out of my DVD. Not DVD. I'm sorry, my manual. Where look, gaps up, pull back. That's the bull flag. Gaps up, pull back. Gaps up, pull back, one last push, and then you get the wash. And look, so when you get this wash, right? Because not everybody, like for me, I can't short this. You need to have 100 grand in your account and apply for the program with Thinkorswim. Honestly, Thinkorswim for day trading, they're not the best. I mean, the charting is beautiful. For options, they're fantastic. But the execution wise for day trading, they're terrible. The only reason why I'm using them is because this is the only one I can access at work. I used to have Centerpoint. I would love to go back to Centerpoint, but I have a job, so I can't access Centerpoint on the platform from work. So I'm stuck with this one. But my point is, when you get a stock that rips like this, you're gonna get a crazy wash, and you're gonna get short sellers driving the price down. Now, this would have required a lot of patience, but you're trying to look for the bottom, and eventually sometimes the bottom comes quick and sometimes the bottom comes later. And as you go down, you're putting trend line. So I would put trend line here to see if you're gonna get a bounce. So I see no bounce, I would keep down. I'll put another trend line here, no bounce. Well, you got a little bounce here, but this wouldn't be enough for me to go buy the dip. I would need to see more volume coming in, or confirmation of the actual another pullback, and see that it holds the support line. And you see here, clearly doesn't. It breaks below it, right? And it has this little bounce here, but then it continues to go down. Let me zoom out a little bit. But look what happens eventually, right? You get one more, so you got one more gap down, right? So you got this, and then it kind of gaps up again, and then it breaks down, then it finds the low here, right? 291. Then you start getting the gap up. Now, I'm seeing the gap up. Once I see that break over 3, I'm probably going in, because I'm saying, hey, you know what? It doesn't seem to be pulling back. I would see this candle here, and I would say, wait a minute, it's not coming back down. It's going up further. And when you see this sideways consolidation, that says, hey, you know what? All these shorters now probably see this too, and they're like, fuck, you know what? The stock is not going to keep going down. Let me cover. And that's what happens. So you get this you got this little gap up. Let's say you got in here, and this 290 break over 3. This stock got up to a high of 315. You had 1,000 shares, $150. But it has this pullback. But this should give you more confirmation on this big pullback that it's good to buy, because it didn't keep going down to the previous support level. And look, this thing just goes for a run. So it gets as high as 350 before you get the other tank, and then they cover in the after hours. So sometimes the panics happen right away. The top was at 1220, the bottom was at 105. So you would have to have some patience watching this, but you got to think to yourself, okay, there's gonna be another run, because this thing spiked up crazy. Shorters are driving it down. There's probably tons of shorters in here, and I know they're gonna cover, and it's gonna cause a spike. And you gotta be patient. Don't look at the P&L, guys. Just let the pattern form. That sometimes you put your stops too quick and you get stopped out, and you don't let the opportunity take place. You gotta have a little patience. with this, and trust me, it's hard. It's not easy. So that's how you dip buy, guys. That's how you dip buy. I'm probably not trading tomorrow because wow, this is another stock I would put on my watch list because I have to work. But you know, I just want you to know that you know, you can do this with pretty much any play. You know, sometimes the dips, the bounces are gonna be high, sometimes they're not. Like here's another example where stock spikes 130.63 to 217 and it starts washing, and this is the first pullback at 191 here, and you got a bounce to like 204, but it continues to drop, and you can buy, you know, these quick little dips, you know. And here's another one, it kind of gaps up, but you don't get a big dip. Now here is the big confirmation. So look, you find the low here, you see the gap up to 178. Look what happens, it comes down and it touches the low, but it doesn't break below it. That is your trigger. Go heavy. That's when you go full size, you know, with whatever you can afford, 5,000 shares, 3,000 shares, 2,000 shares. And look, you could have got yourself a nice little bounce of at least 20 cents, you know. Doesn't seem like much, and you know, this thing continued to break below and gap down, but you know, that 20 cents, depending on your size, can be a lot, could be a little, you know. So you know, some of the spikes, you know, are big and some of them aren't. That's why you have to be real careful when you're doing the dip buying, you know, because this is a stock that look continue to crash. You know, you didn't get big dips, you got quick dips. So when you dip buy, don't assume it's gonna be like prawn where, you know, you get the sell-off and you get the big rip back up. You do, you know, you generally low floaters, they tend to be that way. But you know, nothing guaranteed, so you always got to be careful. All right, folks, so I hope you found this helpful. Again, use that two candle dip buy scan at the market open. Just start looking at these stocks and seeing which ones are panicking. Look, here's another example. This is a stock that would have popped up at the open, and look at this. This thing gets down all the way to 1611. Finds its low, oops, sorry, right? So you put your trend line here, you see it gaps up, pulls back, and you say, okay, look, it got back to 612, never broke below, gaps up, pulls back. Right there, I mean, I'm confident that you're gonna get a push up when you get this triple bottom, well, it's a double bottom, but you count this, you kind of think of it like it's a triple bottom, and then look, you got the rip up, you know? So you in this bull market, this is a great pattern. But even in a bear market, you can do this. You're not going to get as much opportunity. All right, so hope you found this helpful. You know, watch my videos, like and subscribe.